Hey everybody, it's Josh Alexander from Orange County Housing Market News again, and today we're going to be discussing two topics. One, what the current market is doing and how we're expecting to finish out this year, and then two, and more importantly, what the top trends I see happening in 2021 are going to be, as well as my top 4 predictions of what to expect in the housing market next year. So if you're thinking of buying or selling a home next year, you're not going to want to miss this. So let's get into it. Okay, so we're in the middle of December. This year is finally almost over, only a few weeks left. I'm sure yourself as well as the rest of the world want to get this year put behind us in the rearview mirror and move on to 2021. But before we could do that, we are in the middle of the holiday season. We are in the middle of another COVID-19 surge. So let's look at how that's impacting the housing market today. And then we'll go over some of the top trends as well as my predictions of what's going to happen in the housing market next year. So if you are thinking of purchasing or selling your house next year, make sure you stay tuned for that, because that will give you a lot more information to make that decision easier on exactly how you want to proceed once you do decide to pull the trigger. So first, let's go ahead and look at what's going on currently in the housing market before we move on to 2021. Okay, so let's start with the supply. So over the last 2 weeks, supply has dropped by 9%, and over the last month, it's dropped by about 19%. So that might sound like a pretty significant decrease, and it is, but there are two things that are making this happen. One, it's the holiday season. So this time of year is typically the slowest year for real estate, so people are taking their homes off the market that haven't been successful in selling, and a lot of sellers just aren't putting their homes on the market, even though they're not doing the giant celebrations this year with those type of distractions. They just don't want to sell their home during the holiday season, so they're waiting until next year. So that's one reason you are starting to see that dramatic decrease in homes. The other reason is because demand is so high right now. So since August, we've actually been putting more homes on the market each month than we did last year, but because demand is so high, we're taking more homes off the market faster. So let's say for November, for instance, in November we had 15% more homes hit the market than we did in 2019. But then we had 25% more homes actually sell in November than we did in 2019. So the demand being so high is another reason we're seeing supply decrease so significantly on top of the holiday season when you already see that supply start dropping. So in Orange County right now, we actually have 44% less homes on the market right now than we did last year at this time. So if you're a buyer looking to purchase a home right now, the pickings are very slim. You just don't have a lot to choose from. So that means that every home that hits the market, if it's priced properly, is going to get a lot of buyer interest. You're going to have a lot of multiple offer situations, and it's been that way since the summer. So if you've been in the market, you kind of know that to expect that. If you've been saying, hey, maybe I'll wait until December when everything calms down, the market is not calming down. It's still a very hot seller's market right now because the demand is so extremely high and supply is continuing to go down. So in terms of demand over the last 2 weeks has dropped by only about 3%, and over the last month it's only dropped by about 9%, again compared to the supply, which has dropped by about 19%. So what is that doing? It's putting us further and further into a hot seller's market. Right now, average days on market in Orange County is about 37. And if you look at homes under $1 million, it's below 30 days, which is insane. So if you're trying to buy a home under $1 million right now, it's going to be extremely difficult. And the reason the demand is so high right now, you guessed it, I've been talking about this all year and you've seen it in the news, interest rates are at historic lows. So last week, they just, for the 14th time this year, hit another all-time low where a 30-year fixed mortgage was averaging around 2.71%. So it's the lowest a mortgage has ever been. So if you're a buyer, your money has never gone farther. You could never afford more. So a lot of buyers are now saying, hey, let me get in the market because I can afford a higher price home than I could have at the beginning of the year. So that's why the demand is so extremely high right now. And again, why the supply is still going down faster than demand right now. So one final thing I want to point out about the current market is yes, homes under $1 million, which is where the majority of the demand is right now, are flying off the market in under 30 days. But homes above that, so above the $1.25 million, which is considered more of the luxury market in Orange County, are also flying off the shelf right now. This has been one of the best years ever in terms of the sale of luxury properties. So demand for luxury homes is up by 80% over last year, while supply is down by 22%. So it's creating a seller's market for most homes under $2 million right now. And even though above $2 million it's more of a balanced market, homes are going much, much quicker than they typically go this time of year when you're getting to the extremely high price points. So in all price points right now, homes are selling faster than they have in years. So if you're a seller, it's a great place to be. If you're a buyer, you're going to need to stay patient because there's just not enough inventory to satisfy the amount of demand out in the market right now. So if you're currently buying or selling a home right now, what does this information mean to you? Well, if you've been watching my monthly updates, basically I've been saying the same thing since the beginning of summer. So right now we're in a hot seller's market. We were in a hot seller's market in the middle of summer. The only thing that's really changed is every month that's gone on, interest rates have continued to drop, which is creating more demand. And over the holiday season, supply is starting to go down faster as well. So we're now in a hotter seller's market than we were in the summertime, which was still a very hot seller's market. So if you're a buyer right now, the biggest thing to remember, and I'll talk about this in more detail in a second, but right now interest rates are predicted to start going up gradually next year, as well as appreciation is predicted to continue to happen throughout next year. So if you're thinking, hey, I don't want to deal with it right now, I'm just going to wait a few months, I've been placing offer after offer, I'm getting discouraged, that's understandable, because it is an emotional process going through and placing offers and continuing to have someone else outbid you. But if you throw in the towel right now and start back up 3 or 4 months down the line, the chances are you're going to be paying a higher price for that same home, as well as the interest rates are going to start to creep up, which means you're going to be able to afford less home than you could right now. So even though you're not going to get your first offer accepted, most likely on a lot of these homes, you need to stay persistent and make sure that you continue to go out there. If you have to stretch your budget a little bit, as long as you're planning to live there long term, 5+ years, which is usually what I recommend, you're going to be looking at the monthly payments. So monthly payments, if you can manage the monthly payments and you have to stretch to go to the high end of the comps to be able to get into a home, right now is the time to do it, because you'll be able to look back 5 years from now saying, hey, I locked in the lowest interest rates ever seen. I'm extremely happy that I did that because my appreciation on the home has gone up. I still have the low interest rates and I'm in a home now. So make sure you look at the long-term picture, and if you have to spend a little extra money and push yourself to be able to get into that home, it's probably worth doing right now, because interest rates, again, are predicted to slowly start rising next year, and appreciation is also predicted to start going up next year. So you really don't want to wait. You want to continue looking for homes. Now, if you're a seller, again, I've been saying the same thing since the middle of summer, but right now is a great time for you. If you place your home on the market, as long as you're placing it at the high end of fair market value and not above, you're going to have a good chance of selling your home quickly. So again, I stress this every single time. You need to make sure that you're looking at the most recent comparable sales when you're trying to price your property. I've seen time and time again where sellers get too ambitious saying, hey, the market's crazy right now, I'll just price my home $50,000, $100,000 above the last comparable sale and someone will buy it, and then it sits on the market. The longer it sits, the less interest it's going to have from buyers, and you're eventually going to have to start doing price reductions, and that's when those buyers, those opportunistic buyers come in and start saying, hey, they need to sell their home, I'm going to start giving them lowball offers. So the best strategy, and this has been proven time and time again, is to make sure, especially right now, that you're using those comparable sales from the most recent sales in your neighborhood and placing it at the top end of that, because it is a seller's market. You can dictate the price a little bit, but buyers are smart enough to know that if you overprice your home compared to what's been going on in the market you're in, that they're not going to be looking at it and they're not going to be placing offers on it. So you'd rather get as many buyers through your home as possible at fair market value, have them start placing multiple offers, and then they can start doing the work for you where they're outbidding each other to get into the property, because right now a lot of buyers are having to stretch to get into the property they want to based on the current comparable sales. So if you're a seller, again, make sure it's the right price, and then make sure that you have it marketed properly. So you need to have those 3D tours, those virtual walkthroughs, because as COVID-19 starts to impact us more and more every single week, a lot of those buyers are going to be starting to stay home again, so they need to be able to get as much information as possible so they can make an informed decision if they want to place an offer on your home without actually seeing it first, which is what we're starting to see more and more often, especially this year once COVID-19 hit. So buyers, continue to be persistent. Sellers, if you price your home correctly, you're going to be able to sell your home quickly. Okay, so now that you know where we currently are and how we're going to finish out the housing market for 2020, let's go ahead and collectively take 2020, throw it out the window, and let's now finally get into 2021. So we're going to go over the top 2 trends as well as my predictions of what's going to be happening in the housing market in Southern California in 2021. So let's start with the trends. So both of these trends really came about because of COVID-19. It changed the way homes were bought and sold, and I think these trends are going to continue and only accelerate as the years go on. So this is not something you're going to see go away after 2021. It's going to continue. So the first one is going to be how people buy homes. So what I mean by this is when a seller places their home on the market, it's going to be almost automatic at this point that they're going to need to put a 3D walkthrough of the home, virtual tours, and have an agent that's able to do personalized virtual tours with buyers that want to see the property but aren't able to get into it physically or don't want to go in there physically because of COVID-19 or some other reason. So because COVID-19 seems like it's going to be a pretty big factor all the way through at least the first half of the year and probably through the rest of next year, this is something that buyers are asking for. They want information about the property before they see it. So for buyers, this is great news because buyers have more information than ever before to make informed decisions on which property they go to physically and which property they place offers on. So this year has probably been the highest percentage of buyers placing offers on homes sight unseen. You're going to see that continue into next year and years to come because as buyers have more information about homes without having to leave their house, they're going to feel more comfortable placing offers on these homes sight unseen. So you're going to see that develop over the next year but continue going year after year because it just makes sense for both buyers and sellers. So the second trend that has been going on for years but has really been accelerated because of COVID-19 is people are starting to move out of the city centers and move towards the suburban areas. So as employers are starting to realize because of remote working that they really don't need employees in the office every day or at all, a lot of employees are only having to go back to the office maybe 1, 2, 3 times a week, if at all. And because of that, a lot of people are starting to rethink where they live. So because of COVID-19 and how everybody's been in a lockdown for the last 9 months, a lot of people are starting to say, hey, I want a bigger space, I want a backyard. So a lot of people that are in 2-bedroom condos in the city center are realizing, hey, I can afford a 4-bedroom home with a backyard for the same price or maybe even cheaper by moving 30 minutes outside the city. And because they don't have to commute as often, it becomes more practical to do so. So you're going to start seeing a lot of people move out of the cities into the suburban areas. So people from LA, you're going to start seeing a lot of them move towards the Orange County area. For people from Orange County, you're going to start to see them move more towards the Riverside area. And that trend's been going on, but it's just been accelerated because of COVID-19. So if you're a seller in one of these suburban areas, that's great news, or even if you're just a homeowner, because that means your appreciation is probably going to go up faster in these suburban areas than it will in the city centers for the next couple years. Okay, so now let me go ahead and go over some of the predictions that I have for the housing market in Southern California in 2021. So I just want to preface this by saying that this information has been done through weeks of research. I've been looking at articles and reading and listening to the top economists as well as the housing experts to be able to give you this information so you know I'm not just making this stuff up. This is all based off of data. And if you've watched my show before, you know that I'm kind of a data nerd. I like to look at the data. I tell my clients about the data so they can make informed decisions, and it's not just based off my intuition. So let's go ahead and start looking at some of the predictions I have for next year. Let's look at the first one, interest rates. So right now, almost all of the experts at this point are predicting interest rates will will be rising next year. It's just a matter of how much at this point. So anywhere from 3 to 3.5% is where most experts are predicting we're going to be at the end of next year. That doesn't sound like a giant jump, but if we're at 2.71 right now and go up to 3.5, again, I'll bring up this graph so you can see as a buyer, your buying power does go down pretty significantly, even if we're going up by 0.75%. So it's something to make sure you're watching for as a buyer, because as the economy continues to improve and people have more confidence in what's going on, you're going to start seeing those interest rates rise. So as the vaccines start getting rolled out to more and more of the public, and the coronavirus hopefully starts to get more and more under control, you are going to see those interest rates start to go up. We're already seeing an indication that's about to happen. So over the last couple months, the 10-year Treasury, which is something that we really track closely because that is very closely tied to interest rates, the 10-year Treasury has been going up every single month for the last couple months. So at some point, that's going to translate to interest rates on 30-year fixed mortgages starting to go up as well. So we're already starting to see those indications happening that we will start seeing rising interest rates. Again, it's really just a point of how much at this point, not when. So if you are a buyer, make sure you're taking advantage of the interest rates now, because there's a very, very good chance that even 3-4 months down the road, you're going to be having higher interest rates than you are right now. Okay, so the second prediction I want to talk about has to do with appreciation as well as what the market's going to look like for buyers and sellers. So as you probably already know, we're going to be going into January with probably the lowest inventory ever on record for Southern California, as well as one of the highest, if not the highest demand for January for homes that we've ever seen. So this is going to put us in a hot seller's market. That's really not up for dispute at this point. The biggest thing is how long we're going to stay that way. So right now I'm predicting that the first 6 months of the market, we're going to be in an extremely hot seller's market where buyers are going to have a hard time getting into a home. There are going to be multiple bids on most homes, and homes that are put on the market quickly at market value will be swooped up and taken off the market by those buyers. So that's going to happen for the first half. The second half, you're going to start seeing at least some normalization of the market. So it's still going to be a seller's market throughout the rest of next year, but you're going to start seeing it decelerate a little bit and become a little bit more reasonable for buyers. But again, at that point, that's mostly due to interest rates starting to climb a little bit, as well as more people putting their homes on the market. So I have a feeling that next year you're going to see a pretty significant amount of appreciation happen during those first 6 months of the year, and then appreciation will start slowing down as we enter the back half of the year. However, we're still looking at anywhere probably from, most experts are saying anywhere from 2 to 8% appreciation next year for the United States in general. For Southern California and for Orange County specifically, I'm thinking we're probably going to have anywhere from 4 to 8% appreciation. So again, if you're a buyer, interest rates will be climbing next year, appreciation will be happening next year. The longer you wait to get in the market, the more expensive the places are going to be and the less you can afford. So make sure you get that pre-approval now from your lender and start looking as soon as you can. Okay, so the third prediction I want to talk about has to do with forbearance and foreclosure. So if you've been watching the news, you've probably seen at least some information about how they are predicting there'll be more foreclosures happening next year because of all these people that are going to be exiting forbearance and are going to be foreclosed upon if they can't start making their payments. So there's two things I want to talk about with this. Yes, there will be more foreclosures, but demand is so high right now because, again, interest rates are so low that those foreclosures that do happen next year are going to be absorbed by the market relatively quickly, and it's really not going to impact the market significantly. The second thing I want to bring up is the reason why. So I've talked about this in length in other videos, so I'm not going to go over it in a giant amount of detail, but some of the big things you want to really pay attention to is appreciation. That's going to be a big one because of equity. So right now, about 90% of people that have a mortgage on their home have more than 10% equity in their home. So what does that mean and why is that important? Well, if someone is forced to sell their home and they have over 10% equity, odds are they're going to be selling their home for either breaking even or at a profit when you account for things like the fees as well as any missed payments they've had. So what does this mean for banks? Banks don't want to foreclose on properties. It costs them money, it costs them time. So right now, the banks are basically going full speed trying to negotiate with these homeowners that have these problems and trying to figure out payment options for them so they can keep their house and the banks don't have to worry about going through the whole process of foreclosing and short sales. They just don't want to do that. So right now, a lot of banks are figuring out ways to put on the payments on the back end of the loan, either by making more monthly payments or in a significant chunk towards the back end, but they're finding out ways to make it work so the homeowner can keep their home when they're able to start making payments again. So that's something to keep in mind. Another thing is with the forbearance, almost 50% of people in forbearance right now don't actually need forbearance. They're making their monthly mortgage payments. They took it just as an option, as an emergency backup in case something were to happen. They'd have the option to stop paying. So yes, there is a lot of forbearance going on right now, but a good majority of them are paying it, have paid off their loan during forbearance process, so they no longer have a mortgage whatsoever, or actively looking and talking with the bank about how to really arrange those payments so they can keep their house and not have to sell it. So the smaller percentage of people that are in forbearance that are going to have to sell their home eventually, again, because it's a smaller percentage and because demand is so high, it's really not going to have a significant impact on the housing market come 2021. So the fourth and final prediction I want to talk about is how many homes we're expecting to see sold next year. Right now, everybody is pretty much predicting that the market next year is going to be extremely hot and it's going to be a good year for real estate. So right now, most experts are predicting anywhere from 5 to 7% more homes being sold next year than they were last year. And that might sound like, of course, we're in the middle of a pandemic. We didn't sell that many homes this year, right? Well, we actually in Southern California this year are going to be selling more homes than we did last year in Southern California. So on top of that, next year we're expected to sell anywhere, again, from about 5 to 7% more homes on top of that, which is going to put us probably in the highest amount of home sales that we've seen since 2006. So again, the market next year is shaping up to be extremely active. There is going to be a lot of buyers and there are going to be a lot of sellers doing transactions next year. In general, the housing market should remain strong all the way through 2021. So I say should because the last point that I want to bring up is some of the things that I am worried about. So there are a few things out there that could happen that would impact the housing market more negatively and really start eating away at the appreciation we see happening with homes right now. So the first one that I'm watching for is inflation. So if we all of a sudden have a giant uptick in inflation for some reason, that could shoot interest rates up faster and higher than most experts are predicting. And the faster and higher interest rates go up, the less buyers are going to want to get into the market and purchase homes. So if you have that in a combination of more homes hitting the market due to foreclosures, then you have a recipe where you start seeing more of a flat appreciation happening next year. Now again, I don't think that's going to happen. All indications are that the interest rates, and the feds have said this as well, interest rates should be remaining low all the way through next year. So again, it could happen, but it's something that most experts are not predicting to happen next year. But I do want to bring it up because I want to be honest in terms of the data that I'm looking at and any risks as a buyer or seller that you are facing next year in the market. So the second concern you want to pay attention to is the government. So for months at this point, they've been trying to negotiate some secondary deal to help get some money out to small businesses as well as landlords and renters that are having trouble paying for rent or they're not receiving rent from their renters. And then every day it seems like they keep getting closer and closer and then something happens. And then closer and closer and something happens. And I know at this point they're supposed to have something by the end of the week. Who knows if that's going to happen or not. If it does, great. But if the government doesn't act and doesn't get a second round of money out to these small business and communities as well as these landlords, you could start seeing a lot more issues happening next year because of COVID-19 and because really you're not looking at any kind of normalization of anything until at least mid next year because that's when the vaccines will start to become more widely available. So you are going to see a lot more small businesses start struggling and closing at a faster rate if the government does nothing, and you are going to start seeing some of these smaller landlords, mom and pop type, that might have 2, 3, 4 investment properties, and if their renters aren't paying them money, they might be forced to sell. They can't make mortgage payments on 4 different properties if their renters aren't paying them any money. So if a trifecta of all things happen where interest rates start going up, you have more foreclosures happening than expected, and the government doesn't act and does nothing to help out small businesses and landlords, you have that all come together, you could have issues in the housing market next year. So again, I like to be fully transparent. Not everything is rosy. The chances of it happening very low. But I want to make sure you're informed and you know what's going on next year and the things to look out for and the things to pay attention to so you can have a better understanding of what's happening in the housing market. So I hope this information was useful. Until next time, stay healthy, stay happy, and I'll hope to see you soon. Bye. If you found this podcast useful, please hit subscribe and leave a review below. I'd really appreciate it. And if you have any family or friends that want some more information about buying or selling a home, or just want to stay updated on the Orange County housing market, please share it with them. It'd mean the world to me. Thanks.